$10 million. That is what Google just paid for 100 million private emails, 500 million chat messages, and 30 million lines of code, all from an airline that no longer exists. Today, 3 crypto stories, 3 macro, 4 AI. And at the end, how a dead airline's inbox became Google's training data, and why your data outlives every company that collects it. Washington shipped 2 crypto rulebooks in one day, 11 months into the bear market. 1. The SEC just proposed the first major crypto rule in its history, in a surprise announcement 4 days after canceling the vote on this exact rule with no explanation. 2 doors. Startups can raise up to $5 million over 4 years with basic disclosures, or up to $75 million a year with audited financials, plus a path for tokens to stop being securities once the network is actually built. 60 days of public comment. After a decade of come in and register, there are finally 2 doors with dollar amounts on them, and the agency shipped them 4 weeks before Congress votes on its own crypto bill. The regulator is racing the legislature for jurisdiction. 2. Same day, the Treasury proposed its stablecoin rules under the Genius Act. Issuers need a federal or state license starting January 2027, and from July 2028, American platforms can only sell you approved stablecoins. That is the permission layer for a roughly $300 billion market written in public with a comment period. Who gets a license decides which digital dollars survive in America. Every offshore issuer just got a countdown clock, 23 months. 3. VanEck ran its 12 capitulation signals on Bitcoin at around $64,700, down roughly 48% from October's peak. 8 of 12 are flashing. Long-term holders dumped around 356,000 Bitcoin in 30 days, and their share of supply fell below 60%. VanEck's read, this looks like capitulation, and accumulation may already be underway. Watch who is on each side of that trade. Conviction holders are surrendering coins, and the ETFs keep absorbing them. The float is moving from believers to allocators near the lows. 2 rulebooks out of Washington in one day, and 8 of 12 bottom signals at 64,000. The paperwork finally showed up. That's crypto today. A 3-day tariff clock, a 19-year high in bonds, and the Fed speaks at 2. 1. The 50% tariffs on Canadian goods were supposed to hit this week. Late last night, a pause. 3 days explicitly subject to a deal, while Washington and Ottawa negotiate. A former trade officials read, no white smoke yet. Billions of dollars in goods cross that border every single day. Autos, aluminum, energy, and all of it just got a 72-hour countdown instead of an answer. Understand what a pause is. It is not a deal. It converts one cliff into a nearer cliff and makes every importer price the same threat twice in 1 week. 2. The 30-year Treasury yield topped 5.33% on Tuesday, a fresh 19-year high, with the 10-year pushing toward 4.75. Inflation worry, deficit worry, and an oil bid all leaning on the longest promise the government sells. And this afternoon, the Fed publishes the minutes from July, the meeting that split 9-3, with 3 officials voting for a hike. The 30-year prices mortgages, corporate debt, and every data center lease in this episode. When it moves, everything you finance moves. 3. Home Depot grew sales 5.7% last quarter, banked $4.8 billion in profit, and kept its full-year outlook. The same session, furniture chain La-Z-Boy plunged on what it called an uneven consumer, and Klarna fell after trimming guidance. Target and Lowe's report this morning, Walmart Thursday. The American consumer is not gone. It is splitting. Homeowners locked into 3% mortgages still spend on the house. Furniture on credit is where the stress shows. Same economy, 2 faces. A 3-day tariff clock, the longest bond at a 19-year high, and the Fed's argument drops at 2. That's macro today. The inputs are on sale, and the promises are on trial. 4 stories prove it. 1. Google just won a bankruptcy auction for $10 million. The asset? Spirit Airlines' entire data estate. Roughly 100 million employee emails, 500 million Teams messages, 30 million lines of code, and billions of fare records and anonymized passenger records. Google outbid an AI data firm called Mercor, who offered 7.5 million. Stated purpose: improving AI models. A whole airline's institutional memory sold for less than the price of one of its jets. Every distressed company in America just learned what its inbox is worth. 2. NVIDIA's backstop of OpenAI's giant Ohio data center campus was reported near $250 billion. The filed number in Monday's disclosure up to $105 billion. Journal reporting shows it was cut at least twice on the way down. When the 250 figure first circulated, NVIDIA's stock dropped about 4.5% in a day on one fear: the chip maker financing the demand for its own chips. Jensen Huang calls it securing infrastructure. Either way, the most important number in AI just moved $145 billion because shareholders pushed back. The market, not the companies, is setting the ceiling on circular financing. 3. Opening arguments began in a federal courtroom in Oakland. 4 states, California, Colorado, Kentucky, and New Jersey, allege Meta deliberately engineered Instagram and Facebook to addict minors, knew the harm, and hid it. California's opening line: the model is hook, hold, harvest, hide. Damage estimates run as high as $1.4 trillion, which is roughly Meta's entire market value. 6 weeks of trial. Zuckerberg is expected to testify. This is the tobacco playbook aimed at the attention economy. If the algorithm addicted my child survives in court, every engagement-optimized feed becomes a liability. 4. Chip startup. Etched raised $700 million at a $21 billion valuation, roughly double what it was worth a month ago. The trigger: its first customer delivery, 1 rack of its transformer-only chips, to trading firm Jane Street, which is already running it. $2 billion raised in total, and it is hiring away NVIDIA engineers. Read the pattern. While NVIDIA's own customers negotiate its guarantees down, capital is paying double in 30 days for anything that might break the inference monopoly. $10 million for a dead airline's data. $105 billion where $250 used to be. $21 billion for 1 delivered rack, and Meta's algorithm in a courtroom. That's AI today. This week, a bankruptcy court put a price on a company's memory of you. Google paid $10 million for everything Spirit Airlines ever wrote down. Spirit was America's biggest ultra-low-cost airline. The yellow planes, the $9 fares, the fees for everything. It filed for bankruptcy in November 2024, the first major U.S. airline to do that in over a decade. It came back out in March 2025, then filed again 5 months later. This time, there was no comeback. The airline wound down, and everything it owned went to auction for the benefit of its creditors. The planes went to the lessors, the gates and slots went to other airlines. And then came the strangest lot in the catalog, the data estate. Roughly 100 million employee emails, 500 million Microsoft Teams messages, 30 million lines of code, billions of flight pricing records, and anonymized passenger records. An AI data company called Mercor bid $7.5 million. Google bid $10 million and won. Stated purpose in the filings: improving AI models and products. Now follow who decided and who pays. A bankruptcy estate has one legal duty: maximize recovery for creditors. The people inside that data, the employees who wrote those emails, the passengers in those records, are not creditors. They got no vote, no notice worth the name, and no share of the $10 million. For Google, this is the cheapest training data on the market, a complete, internally consistent record of how a real company priced seats, argued in chat, and wrote software for a rounding error about 0.3% of Alphabet's market value. And the precedent matters more than the price. There are dozens of distressed retailers, hospital chains, and lenders in this economy, and every one of them now has a comp for what its inbox is worth. Bankruptcy law treats a decade of human communication like office furniture, something to be appraised, auctioned, and hauled away. Here's the part to sit with. Your data does not die with the company that collected it. It just gets a new owner at a clearing price you never see, in a courtroom you were never in. So here's the question I keep coming back to. When a company dies, its planes go to the lessors and its cash goes to the creditors. Its memory of you goes to the highest bidder. Should the people inside the data have been in the room? And what would they even charge? Tell me in the comments. I read them. And yesterday's thread was sharper than the news. Blue pill, the system worked. An auction paid creditors. Investors talked Nvidia's promise down $145 billion before it broke anything. The regulators finally wrote crypto's rules. And a tariff pause means a deal is close. Red pill, every one of those corrections happened over the heads of the people inside them. Nobody in that spirit data voted, and nobody sold their own inbox for $10 million. Both are true. Pick which one you build around. The timeline keeps moving. We will see you in the next one.